All right, so a lot of people think that this is a big debate on which loan you should get, the 15 or the 30. I really only think that there's a debate in rare instances. Usually see about everybody taking the 30-year up front and the 15-year loan being something that people take maybe when they're older or just more closer to be ready to pay off their loan completely. But the 30-year loan, I call this one the sugar of the two. It's the most common loan. They have a lower and much more affordable monthly payment. You can actually really just refinance into new 30-year fixed loans into perpetuity. Okay, so if after 4 years of a 30-year fixed mortgage, you have 26 years left, you could theoretically refinance into a new 30-year term, and then there's really no limit on how many times you could do that. Spread your loan back out into a lower new 30-year payment, as long as it can reasonably lower the payment and there is a net tangible benefit after considering the closing costs. You don't technically have to pay mortgages off or down to zero. You can have one at death. But these 30-year payments, they give you payment flexibility. Okay, you can pay more if you want. You're not bound to only make the minimum payment if you want. There's almost no early payment penalties today. They're almost non-existent. So you could still get this 30-year loan and pay it off in 15 years if you want. You could pay it off in 27 years, in 19 years, do whatever. You can pay it off in quicker than 15 years. So that's the main point about the 30-year. Then the 15-year, I call it the broccoli of the two. Okay, if you hate debt, even though mortgage debt isn't always a terrible piece of debt, usually those interest rates are a little lower than the car debt and some other debts you can have. But if you want your loan gone as soon as possible, the 15-year fixed loan's for you. If you plan on retiring sooner and you don't want a mortgage for the next 30 years, you might lean this way. You will definitely pay these off faster. You're not bound to only make the minimum monthly payment on the 15-year loan either. You can always pay more. Almost no prepayment penalties on this either. But to get this 15-year loan, you do have to qualify to be able to make the higher monthly payment. Okay, so the principal and interest payments on these are usually about, from what I see, give or take 60% higher than the 30-year fixed monthly principal and interest payments. Okay, another incentive for these is that they usually come with a lower rate, usually around 0.25% to 0.5% lower than the 30-year fixed rate. I don't think that's too big of an incentive. But I do see a lot of people refinance into a 15-year loan when there's somewhere between 13 to 18 years left on their 30-year loan to shorten the term and lower the rate and payment. Now, if you do this 15-year fixed loan, you can't send any of the extra money that you'd have left over after a 30-year fixed low monthly payment towards your investments, okay? And this is honestly where a financial advisor would be proper to consult, since this part, the strategizing over it, isn't so much my line of work. My company doesn't really want me to recommend you one or the other. But still, you do always want to have this option in mind. Okay, when you compare the 30-year rate to what you can be making in the market, long run with your investments, if your mortgage interest rate is lower than your potential returns in the market, then, okay, a financial advisor might tell you, hey, don't send those dollars to knock out the 4% interest rate. Send them instead to me, the financial advisor, and I'll get you a 7% return with it. Okay, so again, that's something to consult with there. Also, one last note or two, there's a 20-year fixed loan. The interest rate is somewhere between the 15 and the 30. It's usually closer to the 30. So I really don't see so much of an incentive to take a 20-year fixed loan. It's not super popular of a loan, but every scenario is different. It could work out for you. And again, I'm really not allowed to recommend, but I'd go with the 30-year fixed rate for flexibility, lifestyle, and so on. But again, you could have other ideas. So tell me in the comments which loan you think you'd prefer, and thank you very much for watching.